Welcome back, everyone. We are moving into the last hour of today's trade, and I wanted to come in a little early and give you a view of this market as it gets right into that close. What you're looking at is a daily chart of the SPY here. It's been traversing this upward trend channel since the bottom of the market in October of 2022. We are in a statistical channel where when inside the very top quadrant above that pink line below the red, it's buying beget buying, or downward pressure starts to build. Now, we've been up here before. We've risen, gotten back up into this territory. Lots of negative divergences present. However, the market has not let go, and you're seeing a whole bunch of lines running horizontally through the screen near price. The blue and the purple are the center of the weekly pivot range. The very top dotted, bottom dotted, that's the extremes of the weekly pivot range, and we perforated it, but we're still holding above. Now, this pattern is not necessarily a very bullish pattern, but it is very much driven by the cues. So when we take a look at the SPY, all of that cross-pollination between those big names, well, it is those big names that are giving us some trouble. When we take a look at the cues specifically, I'm going to show it to you in a different way over here. I'm going to give it to you in a view using a volume-weighted average price cone. So it's a statistical cone. The center is the VWAP for the Qs on a 5-minute chart basis going back to the beginning of August. And each line is a half standard deviation. So when we get up to that red band or that very bottom green band, mean reversion is likely to kick in. But the case in point now is we were about a standard deviation above VWAP from the middle of August all the way up until the back end of last week. We tried our darndest to get back up there, and we're not able to really hold. As we came into this week, we continued to weaken. The status quo pattern would support a dip down to that half standard deviation marker, but very likely then a bounce back up. It's above that 480 to 481 marker where the Qs can sing again. Below 479, downside risk is plentiful, down towards the lower 470s, upper 460s. Now that, in and of itself, is not a outlook driven by key technicals. It's got a couple of technical overlays. But what I want to do now is take you deep into what the technicals say about the S&P 500, driven by those key components that the Qs and SPY share. Let's go take a quick look-see at a multi-time frame view utilizing this approach, and what I really want to zoom you into here is the daily chart. Now, there's a lot of charts on the screen. Of course, I want to simplify, and what we're going to do very simply here is focus in on the signal on the daily chart and get a really robust sense of whether or not the signal's changed. The answer to that question right off the bat is no. However, we are at a spot that is fairly common and clear as to what usually happens here. Why is that? Well, the Champion Trend Pack Toolkit, which is unique to wealth charts, it's been developed over decades by champion trader Rob Hoffman, 33-time real money on-site international domestic trading champion. No one else out there that we know has that status. Now, he's built these tools to make it intuitive with a sequence. And we've got a buy zone, champion trend. Champion cross is the opaque zone here, and that is also coming with a bottom of chart signal. It's engaged, and it was engaged on the 15th, and we've got stage 1. We also had well signal. Stage 2 was where we were left at. Now, this is, of course, a couple weeks back. Now, if we go take a look at the breakout forecasters, there's 1, there's 2, there's 3. If we have an absence of breakout forecasters for 2 to 3 bars, and we are also seeing a crossover from that fast speed line, blue, trying to cross down below the magenta, well, that becomes the end of stage 3. We're not signaled there yet, but the setup sure is darn near close. So we need to be mindful of what happens usually after that, and what usually happens is price action tends to come back and test the last or second last, and in certain cases, the third last breakout forecaster. Now, that's all the way down at 5,500. This is around that 55.50 area for the ES. And effectively, that drops us about 87 points to 90 points from where we are. That's $9 lower on the SPY from where we are right now. That takes us from about the 561 area down to about the 552 area for the SPY. So I'm going to flip back over here so you can see that. Takes us from about that 560, 61-ish area down towards that 552 area. Still keeping us within the boundaries of the weekly pivot levels. However, stressing the market indeed, or is it a refuel? Now, Monday and Tuesday have less encumbrances. Wednesday, we've got NVIDIA's earnings after the bell, and then we do have on Friday inflation data. The core PCE price index presents. So it's a bit of a bumpy back end of the week, but the front end of the week has got more room for this market to actually zoom if it can maintain buy signals. Now, the daily chart, as we just saw, is not clear to be over stage 3. However, the 4-hour chart starts to scream out, watch your back. We are in a spot where we've got negative divergences, negative momentum shifts, sell signals within a flattening out buy zone, all pointing down to the 5540-ish area on the ES with a target 1 from that last close 4-hour bar. That still is a sell signal in an uptrend, and we would certainly need to see 5600 break before any of this would become a material move down to this territory. The other side of this is the side where we are holding weekly a buy signal state on a daily chart. We have not fully overturned all of these support properties on a 4-hour chart, and it would require price grabbing a hold of 5650 or higher to really tell us we've got something going to retrace back up to the highs from today and or higher all-time highs, which would be back over here in the middle of July. Now, as far as the technical signals go, it is not a high probability that we just break out and run. We've got blue in the candles, which is technical damage, and the daily chart is right at the precipice of potentially ending stage 3 of the Champion Trampac sequence of signals. And what usually happens is we pull back to those breakout forecasters. A bounce off of them is likely, but a pullback first becomes a higher probability. With price action closing anywhere below the 5600 area on the ES, it becomes a higher probability that that pullback is in motion and may be simply over with in the middle of the 5500s. We've got to watch our backs, of course. This is a stretched market that requires a lot of grooming in order to keep booming. Speaking of booming, we have got the best Wealth 365 Summit coming your way shortly. It's the election edition. We haven't had a chance to do this in years, and we are very much looking forward to a power-packed lineup of speakers, never seen before, some of the speakers, and a very curated, targeted set of agenda in terms of speaking, outlook, and strategy that you're going to be hearing from many, many mentors like myself, like Rob Hoffman, and many more. We're super excited to have you join us. It's coming fast and feverishly for October the 14th through the 19th. Get your seat now. Get situated now. Live in your comfort of your home office. You can watch, follow along, and participate. And the participation really gets into high gear when you sign up now and get all of the materials well in advance. Simply go to joinziad.com. Get yourself registered. I look very much forward to seeing you at the summit, and of course, in videos just like these in the days to come. We'll keep you abreast of this market that's getting a little toppy, but hasn't actually blown through those key supports and told us it's all said and done. More on that tomorrow. Wishing you a wonderful rest of your day. Thanks for watching. Bye for now, all.